This is Jack Steinman of The Informed Trader, www.theinformedtrader.com, as you can see here. I have in front of me the S&P 500 weekly chart, and when we study this, and we've been very long from the bottom here, when we had the sentiment trade start, when the bull-bear percentage reached a point that was inverted, where there were too many bears, at minus 12% more than the bulls. We had 5 straight weeks of inverted numbers. This kind of brought about a situation where we could go long, and we did go long. Now everyone wants to get bearish, especially based on Wednesday's 400-point move down, which we see right here. The problem with that, though, is that there still hasn't been any damage done to this weekly chart. You can see that the stick, actually this is a weekly chart, so that was right in here, and nothing was done technically to ruin this chart from a more bullish perspective. The sentiment trade is definitely over. I wouldn't argue with that. That I would say is absolutely true, as now that it's back to almost 10% more bulls, which is still a bad number for the bears, but not as bad as it was. But when you look at this chart, there's nothing bearish about it. You see that we leaped over the 20 and 50-day moving averages, and we've put 3 consecutive tails back testing and moving up. When you see that, that's normally something that's going to have a bullish resolution. Volume trends have not been bad lately. As you can see, it flushed out on the heavy side when the market made its bottom, and now volume trends are pretty good. And with the gap up over the 20s and 50s of 2 weeks now, testing them and moving back up, this is pretty good news for the bulls. Now we have trend line at 1325. Any move up there would then move the oscillators to a point where we'd probably be getting more overbought, especially on stochastics. The MACD would move well back above 0, and the RSIs would start to approach 70, and once you get near 70 RSIs, you get too overbought. So somewhere in the 1325, 1330 range where this trend line comes in, that would probably be the best of the move. The 20 and 50-day moving average is supporting it here just above 1220. So good news for the bulls is that they've got good protection down here on the daily charts. 1221 is your 50-day moving average. I use the EMA, so this is very good. 1220.25 support, 1325 resistance. This looks to me like the weekly chart suggesting that this moves higher. There's never a guarantee, but this is what the charts are telling us. We've been only long from the bottom. Only long. We have not had one short coming off the bottom, especially when we had the sentiment trade in effect. And although Italy at times and Greece at times has made problems for the market here and abroad, especially abroad, and it filters over to the United States, you can see that the weekly charts are still not suggesting anything in the very bearish mode at this point in time. If we get up near 1325, you take all your longs off, you watch and see if you put a reversal candle in that tells you the top is in for a while. If somehow you break through and you break out, you play that as well, unless it moves back down below. But for now, what you're worried about is, if you're a bear, is first thing, you don't want to see this get up to the trend line, but my gut feeling says in time we will over the next several weeks, and then probably pull back off that, and watching the nature of that pullback will tell us all we really need to know about the market. I definitely would not be bearish here unless we come down and break below 1225, 1220 area, which would take out the 50s on both the weekly and the daily charts. If you want to come in, take a 21-day free trial. You have to sign up. You put in your credit card. It sits there pending. Just come into www.theinformedtrader.com. Look at the work we do. We have video clips. We have a discussion forum where ideas are spread about all day, plus multiple charts all day long by Robert New, my partner, who puts charts on the board day and night. Come in, take a look at the service, see what we do for 21 days. If you're not happy, by the way, you can take a 1-month or a 6-month trial offer. Both very cheap. It's a little over $40 per month. It's a little under $40 if you take the 6-month, only about $38 a month average. The newsletter, I do a newsletter 3 nights a week. I used to work for TheStreet.com and wrote for them. So 3 nights a week, updates morning and afternoons. Alerts are sent out as warranted. We put stocks out for longs and shorts when need be. We've always been able to outperform the markets every year we've been in business for the past 5 years. We're very appropriate. We don't overplay. We keep things safe. If you're looking for very aggressive, we're not for you. But if you're looking for a good service to provide outperformance, newsletters 3 nights a week, discussion forum all day long, charts all day long in that discussion forum, updates and the like. Give a 21-day free trial to www.theinformedtraderjack.com. This is Jack Steinman, co-president, signing off on this weekly S&P chart, which I believe, will end up more favorable for the bulls than the bears. Peace.